Dust off your cowboy boots and get your best friend ready. The Taylor Swift Eras Tour is landing in Australia this weekend, but with rising interest rates and cost of living woes dampening consumer spirits, will the Queen of Pop be able to shake off consumer gloom? Joining me to discuss is AMP's Head of Investment Strategy and Chief Economist, Dr. Shane Oliver. Shane, welcome.
Thanks, Lel, and thanks for having me.
Now, as I've mentioned, Taylor is coming to town this weekend. I hear you've even got a ticket yourself, Shane, and I have to ask, will you be in the front row?
No, unfortunately, despite my best efforts, I ended up only with the tickets that were obscured. I only just got my ticket a few days ago. You know, they're the cheap ones. They're $66 tickets that might have a pole in front of us. At least I can say I was there and I will have seen half the concert or something like that.
Absolutely. At least you will be in the room. And of course, the impact of the tour has been enormous. It's been referred to as Swiftonomics. Can you explain simply what does this mean, and realistically, what impact will Taylor have on Australia's economy?
Well, I think Swiftonomics is sort of like a variation on, you've heard these things before. There was Abenomics after the Japanese Prime Minister 40 odd years ago. There was Reaganomics after President Reagan in the US, and so on. So Swiftonomics really refers to the economic impact of Taylor Swift's Eras Tour, which is a massive phenomenon globally. Lots of other countries have got the benefit of that. Obviously, people spend money on the tickets, keeps people at the venues employed. The hospitality industry, particularly hotels, travel, people flying into Sydney and Melbourne. So all of those things will lead to a boost to spending, which we roughly estimate to be somewhere between $500 and $600 million. And that will get injected into the economy over the next 2.5 weeks. So that's basically what it refers to, the impact on the economy and the associated spending.
They are pretty huge numbers. And even RBA Governor Michelle Bullock has weighed in on this. She recently implied, though, that Taylor's tour will likely come at the expense of other things. And I'm curious to know from you, what do you think it will take to really properly reignite retail therapy in Australia?
Well, it'll probably take more than Taylor Swift's Eras Tour to shake it off, that consumer malaise in Australia. Yes, there will be a boost. But as Governor Bullock implied, some of that will be offset by spending cutbacks elsewhere. You know, people will save up to spend money on the tickets and they'll forego other things. And of course, you know, it's an import. So part of the money, or some of that money, won't stay in Australia. Our very rough estimate is that you still have about 400 million staying in Australia. But of course, you also have to put that in context. You know, as an economist, I have to do this, much as I'm excited about it. If you look at 400 million into a $2.6 trillion economy, it's only about 0.02% of GDP. So you might get a bit of a boost through the month of February, possible increase in airfares, hotel rates, and so on, maybe even the February CPI. But I think on an annual basis, the impact will be hard to detect. And so that's why if we are all excited about Swiftonomics, you need to calm down a little bit about it, because it's not going to get the Australian consumer out of their malaise, given high interest rates.
Yes, and on that, Shane, look, despite however gloomy Aussie consumers might be feeling now, stock markets here and in the US are at record highs. How do you explain this disconnect?
Like it's often the case that the share market runs ahead of everything else. Shares collapsed in 2022 when inflation surged and interest rates started to surge. And of course, the market was anticipating tougher times ahead. Now what's happening is the market is anticipating lower inflation, lower interest rates, and ultimately better times ahead, maybe from later this year or going into next year. And so that explains why the share market's managed to go up, even though we're still getting bad economic news, including through the company reporting season. There's been stocks that have had 20% falls in their profits, and their share price has gone up on the day. And it's because the share market has already factored in the bad news, focusing on the recovery ahead.
Now, on that recovery ahead, looking beyond this week's concert, when Taylor's tour comes to a close, when do you expect the next rate cuts to be this year, and how would you expect the ASX to trend in the year ahead?
Look, I think the trend in the Aussie share market will be up. I don't think it will be as strong as it was last year, where we returned something like 12.5% on the ASX 200, or around 8% in terms of capital growth. I think it'll be a little bit more constrained than that. probably a little bit more volatile given geopolitical risks around the world and uncertainty as to when interest rates will start to come down and obvious recession risks. So those things will sort of act as a bit of a drag, but I think the broad trend will be up. And we think the Reserve Bank will probably start cutting interest rates around the middle of the year, ultimately seeing 3 rate cuts in Australia, taking the cash rate down to 3.6% from 4.35% currently. Now, of course, the RBA is not there yet. They're not going to tell us they're going to do that until they're actually going to do it. But I think over the months ahead, they will get less and less hawkish, more and more dovish, ultimately setting the scene for rate cuts.
Well, Shane, thank you so much for your insights. It does sound that there's a little bit of gloom being shaken off there. And most importantly, enjoy the show.
Thank you. And thanks for having me.
My pleasure.